Good evening, unit holders of Sabana REIT, and welcome to this SIAS dialogue session with Sabana, as well as ESR, on the ESR and Sabana REIT merger. On 4th of December, unit holders of both Sabana REIT as well as ESR-REIT will vote at the respective EGMs on a transaction under a scheme of arrangement. The vote will be determined by minority independent unit holders. In order for you to make an informed decision, we have organized this dialogue with unit holders and the management of Sabana and ESR REITs to provide you with the details of the merger and to address any questions regarding the merger. SIAS had earlier actually did a dialogue regarding the issues around this merger, and we've publicized that, so you can view that at another time. But today we are here to address all your questions, and we mean it, all your questions. So please send in your questions via the Pigeonhole link provided, and we will attempt to address all your questions in the time available. Before we take the questions, let me set the context and put out the issues so that we can have them addressed for unit holders. This merger has been publicized with two outspoken funds in Sabana that have accused ESR of being in a conflict situation, as ESR is a shareholder of Sabana REIT manager. As highlighted in the BT on Monday, the issue is that under the merger deal, holders of every 100 units of Sabana REIT will receive 94 units of ESR-REIT. Based on ESR-REIT's closing price as of last Friday at 38.5 cents, unit holders of Sabana REIT would be getting about 36.2 cents for each unit they own. This is about 34% above Sabana REIT's closing price on Friday at 35 cents, but is 29.3% below Sabana REIT's NAV as of 30th June of 51.2 cents per share. By contrast, ESR-REIT's closing price on Friday of 38.5 cents is only 2% below its NAV as of 30th June at 41 cents per share. On 18th November, Quartz and Black Crane issued a letter proposing the removal of Sabana REIT's existing manager and internalization of Sabana REIT management function. Both Quartz and Black Crane also suggested 5 levers of increasing DPU of about 30%. Is this possible? With the current COVID-19 situation and market volatility, why proceed with this transaction? Should we wait for something more opportunistic, take it a separate time? Why not postpone the transaction at a later time when the market is more stable? These questions and many more will be taken by both Donald and Adrian, who are with me on the panel this evening. Can I request that you also send in your questions early so that we'll be able to address them? So to kick off this session, let me hand over to Donald Han, the CEO of Sabana REIT, to take us through the details of the merger proposal. After the presentation, we'll come back with Q&A. So please submit your questions, ladies and gentlemen, and hand over to you, Donald.
Thank you very much, Richard. Good evening, everybody. Thanks for joining us today to discuss the proposed merger of Sabana REIT and ESR-REIT. We'll kick off today's agenda by giving you an overview of the proposed merger, and I will walk you through the key benefits and rationale of the merger. We will also briefly cover the required approvals and timeline for this transaction, after which we would like to spend some time addressing unit holders' queries and concerns, as there has been a lot of noise, as what Richard has mentioned, questions, claims coming from certain activist funds. When we first announced the proposed merger on 16th of July, the rationale was very clear. Size does matter. We believe the proposed merger will be transformational for Sabana REIT, accelerating the REIT's growth and propelling it immediately to be amongst the largest industrial REITs in Singapore. The enhanced scale will enable us to be more competitive, while the larger asset and tenant base will put us in a stronger position to undertake initiatives to improve and rejuvenate the portfolio at lower costs with minimized execution risk. Recapping the terms of the merger, under the scheme, Sabana unit holders will receive 0.94 new ESR-REIT units for each Sabana unit based on a gross exchange ratio of 0.94 times. The gross exchange ratio is the relevant and market-driven metric here, given both REITs are listed and unit prices reflect the market's view of the REIT. Let me be very clear. This is a merger. Investors will effectively roll over and continue to stay invested and benefit not only from our existing, but also the enlarged REIT's continued distribution growth and portfolio upside. This is not an asset sale, where the concept of asset sale is you collect the cash up front and that's it, the end. It's like having two neighboring houses. You tear down the wall between and you continue to grow and benefit from the appreciation together, versus selling your property to your neighbor and no future income in the future. While NAV per unit may be a useful metric in assessing value in a transaction, it should not be the only factor when considering the merits of the proposed merger. Unit holders should also consider the compelling transaction rationale and pro forma DPU accretion, which is at 12.9%, the highest ever among S-REIT mergers. The offer of 0.9 times gross exchange ratio for the proposed merger represents a premium to historical gross exchange ratios, as seen in the slide here. We encourage Sabana unit holders to carefully consider the key transaction rationale and what they stand to gain from the merger. In a nutshell, we firmly believe that bigger is better. With the benefits of scale and a more diversified portfolio, we will have increased flexibility to accelerate growth and AEI initiatives, opportunity to be added into indices, which leads to potential re-rating and focus on delivering continued upside for our unit holders. We will be seeking our unit holders' approval for the merger at EGM and scheme meeting, which both will be held on the 4th of December. Importantly, as stated in our scheme document on the 12th of November, Sabana REIT's IFA, Deloitte & Touche, have opined that the financial terms of the proposed merger are fair and reasonable. Accordingly, IFA has advised our independent directors to recommend that Sabana REIT unit holders vote in favour of the scheme resolution to be tabled at the scheme meeting. The Sabana Independent directors have also recommended that Sabana unit holders vote in favour of Sabana Trust Deed Amendments Resolution and scheme resolutions. We highly encourage all Sabana unit holders to express your right and vote in the upcoming EGM and scheme meeting by submitting Proxy Form A for EGM and Proxy Form B for scheme meeting. Proxy Form A and Proxy Form B must reach unit register no later than 1st December 2020 at 2 p.m. and at 2:30 p.m. respectively. Given this is a forum hosted by our well-respected SIAS, I'd like to spend some time addressing unit holders' queries and concerns, as there's been a lot of noise and questions claimed coming from certain activist funds. While we have already released multiple public responses to clarify and rights of their claims, we would like to take this forum as another opportunity to highlight key clarifications. More importantly, the release of activist funds published this morning, we have still not responded to their EGM requisition notice. Just take note, unit holders, we actually released this on SGX website, which you can actually have a look. It contains almost 30 to 40 questions that pertains to November 18 questions, 5-lever target plans that Quartz and Black Crane has on 18th of November. We have still not received any response from them. Please have a look at this. We would like to point out that we have already responded direct Sabana unit holders to peruse our announcement on SGX.net, which is dated 22nd of November 2020. We have also released point-by-point responses in presentation format, which we'll be going through shortly. You can find a copy uploaded on SGX.net. The ball is now in activist funds' court to back up their claims. Activist funds, Quartz and Black Crane, have made many claims in order to influence unit holders. Many of these two funds' claims are inaccurate, are not supported by market realities, and have not been substantiated. In contrast, this merger is a concrete proposal that has been set out in a scheme document which has been reviewed by regulators, which includes an independent financial advisor's opinion. To equip unit holders to make informed decisions, the Sabana manager has been publicly responding to queries and clarifying misconceptions, supporting its points with robust analysis. The two funds have largely ignored the Sabana manager's responses, and instead have either repeated the same flawed assertions or changed their claims without acknowledging that they have actually made errors. We know that the vote on the merger is an important decision for our unit holders have to take, and therefore we would caution that investors look carefully, as to date the claims by these activist funds have yet to be substantiated. Unit holders should protect their own interests by carefully examining the fund's claims and not to take them at face value. The merger needs to be evaluated holistically with due consideration for the benefits it presents vis-a-vis the challenges Sabana REIT will face as a small standalone REIT. The activist funds continue to assert a potential DPU upside, which is unrealistic and unsubstantiated. They have named several assets in Sabana REIT's portfolio, which they claim to be redevelopment opportunities. However, they don't factor into the impact of loss of income from the asset during downtime as a result of redevelopment. The impact of loss of income is much larger on a smaller standalone REIT. On a large basis, we are able to take on redevelopment given the impact is cushioned by a larger portfolio. Their claims on construction costs are also questionable. We would like to know where they got these estimates and how they can expect to fund total cost of development. This is not to even mention the fact that they have inaccuracies in quoted figures for untapped GFA, gross floor area, and plot ratio. Their claims show a lack of understanding on how lenders view borrowers' credit. On the contrary, ESR-REIT has obtained a committed loan for the merger at 2.5% all-in interest cost. This clearly demonstrates that the enlarged REIT has the ability to refinance all of Sabana REIT's loans on an unsecured basis and at a lower cost, which will be beneficial to all Sabana REIT unit holders. The activist funds continue to remain fixated on the discount to NAV without explaining that NAV alone does not show the full picture. The precedent transactions they've quoted are not even comparable transactions. Quartz and Black Crane use privatization and asset sales, not mergers, as comparisons. In reality, the discount of NAV of precedent REIT mergers is actually reflective of the prevailing implied price to NAV of REIT at the time of announcement. This merger is no different. We would get a deal at 1x book since we are already trading at a discount to book even prior to the announcement. We would like also to note that the proposed scheme consideration reflects an approximate 5% premium above the last traded price prior to the announcement. Moreover, for this merger, unlike the activist funds, the independent financial advisor Deloitte & Touche has looked at a range of parameters, not just NAV, in evaluating and assessing the proposed merger to present a more objective and independent opinion. We also encourage Sabana unit holders to holistically consider what ESR-REIT can bring to the table, rather than taking the claims made by the activist funds at face value. Further, their 5-point plan is speculative, not supported by realistic basis or assumptions. The fact of the matter is that the merger is the only offer that we have on the table. The activist fund's most recent proposal to internalize the REIT managers is also questionable, as they paint an uncertain future of Sabana REIT with no details on likelihood of approval, source of financing, nor substantiation of cost savings. With all that said, the proposed merger with ESR-REIT is the only offer on the table and has a compelling transaction rationale with continued value creation for Sabana unit holders. The activist funds have said that we have not answered some of their questions. But if you look at our scheme document announcements, we have been very transparent and have responded all of their comments. Even this morning, as I mentioned, they have also said that we have not answered their recent requisitions for certain information. But the truth is, we have already responded to the specific requisitions openly via SGXNet 3 days ago. On top of that, we have already provided over the last few months. On the contrary of the past few slides has shown, it is the two funds that have made many unsubstantiated claims. In fact, if you look at the many versions of their open letters and presentations, they have quietly changed some of the numbers over time after we challenged them. This is why we are questioning the integrity of their assumptions and why we have called them to substantiate their views. We have not seen any meaningful response other than the old news to date. We encourage all unit holders, Sabana unit holders, to carefully consider the facts and, importantly, exercise your vote, your right to vote wisely. Thank you very much.
Thank you, Donald, for that detailed presentation. But let's start with, I think we're letting people are sending their questions. And I think we're looking forward to this question. But let's start with this thing, addressing this ratio of Sabana units to ESR-REIT units under this deal. Given the fact that this issue about NAV has come up, why is the ratio priced below the Sabana NAV? Perhaps you could explain it a little bit further. And I think we've started to. I think it still hasn't sunk in yet.
Okay, so again, let me reiterate, this is not a sale of asset. The price is not been determined as to the price of ESR-REIT or Sabana REIT. It depends on the effective date, if the merger goes through in that sense, what the price of ESR-REIT will be. And the ratio is an important consideration. This is fixed of 0.94 in that sense. And in that sense, when this was announced on the 16th of July, if you look at the price for Sabana, it was already, based on this ratio, it will be 5% higher than the trading price on 16th of July in that sense. So this ratio has been discussed based on many months of negotiations. And this is the key of how we have struck in terms of the proposition here.
Well, from my side, Richard, which are this surviving entity, when we do any analysis on mergers or on it, we always start off the starting point with what is the historical trading price? What is the trading price of REIT, of a stock? The trading price of a stock is, especially for REITs, and it's relative to the NAV, it's actually the market's view, and this is what the market is telling you. What they think is the underlying worth of this stock. NAV of REITs is all backed by valuations. We all know that. But valuations of properties is always a guide, right, Richard? And that is the reason why why is it a guide? And that is the reason why you see banks actually giving you loan to value ratios. They don't give you 100% loan to your value. That's because it's always a guide. And the key part is what is the price, trading price? Because the trading price of a REIT is a reflection of what the market thinks your NAV will be. So that has to be the starting point. Now, after the starting point, we have that, we establish that, then we come together and negotiate and sit down and say, okay, what is REIT bring onto the table? Where are the opportunities? Where is the risk of the asset? Where's the location of the asset? What opportunities can we do that we can price that in? And what is the constraints? Because some assets may look like as if they have a maximized plot ratio under URA plans, but actually under the head master lease, you can't do it. So, so these are the things we negotiate. And then, we will, both Donald and I will just negotiate and say, okay, I bring this on the table, you bring this on the table. And we arrive at a price or what we call a proposed merger terms, in our opinion, that is beneficial to both sets of units and balances the interest. At the end of the day, a REIT merger needs both sets of unit holders to vote okay. And if we all skew to one side, then we don't have it. And we think there's NAV is one of the parameters, but we also look at the DPU accretion. So on a historical pro forma basis, I think Sabana is getting like 12.9% on historical pro forma basis. I'm only getting a 3.4%. So I actually have criticism from my owners, ESR-REIT unit holders. Why are you giving away so much?
So take note that we both have to get our own unit holders approval. So it has to be an optimum merger terms rather than each one of us trying to maximize. And if you look at the last 3 years I've been running the REIT, we have always been hovering in terms of our price between 20 to 30% below our book value.
So it's been trading
that has been a fact of life, unfortunately, for Sabana. But that's how we've been doing, and that's part of the reason why
actually, in fact, for ESR-REIT, we've been pre-COVID. We have been trading at the premium to NAV of 10 to 15%. Obviously, with COVID, things have thrown everything out the window. But now we are at NAV. Yeah.
We're expecting a vaccine to come on soon. So
we all hope so. We all hope so.
So let us take some of the questions that
sure.
I think we have one here. So why did Sabana not agree to the EGM requisition by Black Crane and Quartz?
Okay. That's an interesting question. Okay, so for this requisitions by Black Crane, I think they came up with 5 points. To be fair, there are more questions than specific requisitions, resolutions to vote yes or no. In any EGM, you need to give voting yes or no. It's a binary thing. But the questions that we should ask by Black Crane and Quartz relates to more questions, which we have actually clarified last Monday through a very detailed 9-10 pages in that sense, and that answers everything that needs to be answered. There's really no need to have an EGM to talk about the respective requisitions that they have. All the requisitions have already been covered in that sense.
Yeah. Maybe I may just add, Richard, sometimes we always know to tell I have sometimes the same question from unit holders, is that there's a difference between questions and resolutions to vote on. So I think unit holders and ourselves sometimes also get confused, but questions and resolutions to vote on.
How do you vote on a question? How do you vote? I'm puzzled.
Yeah, so there's more. So there seem to be more clarifications.
Sure, and which we did. We actually responded back last Monday and a whole list of answers to them.
And I think there are more questions raised, right?
I'm not sure, but there were more questions raised subsequently on the internalization of the manager, of which we have actually again responded back today with a list of 30, 40 questions. And Richard, the wheels are in motion for proxy voting. It's already started already. So minority and vote, the merger is now in the hands of minority independent unit holders to vote. We need a transparent process of knowing what the pros and cons of the different strategies have. Our strategy is very clear. We have got a scheme document. We want to recommend this merger, and it's supported by the IFA, our Deloitte & Touche, as well as Rothschild on the side. And today we just received from proxy advisors, which is ISS and Glass Lewis. They have also in favor of the merger, and that's being tracked down by, in fact, the institutional investors would look where these proxy voters would land to, and they will vote accordingly as well. So I think that is the comprehensive evaluation that unit holders should look at, rather than looking at questions and noises in the market, so to speak.
Perhaps, just to add a little bit of flavor in terms of, because what are some of the other institutional investors saying? I think you've done some roadshows. I mean, what are some of the other institutional investors maybe? Adrian, I think you've done also your roadshows in terms of putting this merger out.
Correct. I think before we come to the investors, I think the important part is, the first part is always analysts.
Yes.
What is research analyst views? Because these guys breathe, live, and eat real estate every day. That's what their job is, real estate. For example, give you some examples, like DBS Bank, who covers both ESR-REIT as well as Sabana REIT. They are actually in favor and supportive of this merger. Obviously, ESR being the larger vehicle, we have more analysts. So we have analysts like CLSA, CIMB, Citi, that actually says that yes, this transaction is actually beneficial. They understand the rationale because size does matters in REITs. Size is important because it gives you access to pools of capital and at lower costs, and that REITs, Richard, we pay out at least 90% of cash. We don't retain cash. So access to capital, continual access to capital is very important. And if you can get it at a lower cost, that's better. And it comes to size.
So size matters.
Size matters.
Perhaps you just one question here from Mr. C. Sabana's 33.4% leverage ratio as at 30th September is much healthier than ESR's at 41.6 gearing. Why should Sabana merge with ESR when Sabana seems to have a stronger balance sheet? Could you shed light?
Another good question. So it's just a falsity. It's just false to just look at just the gearing ratio. The important thing is you look into your whole debt to see whether is your debt secured or unsecured. Our debt, 94% of it is secured to the banks, which means I can't take one property and refinance out because that's already been secured. I only have 2 properties, which amounts to about roughly 6%, which is unsecured, of which out of the 2 property, one is a vacant land, and we're trying to sell it. In the last 2 years, we're not successful. So we can only raise about 26 million on our side. And if you look at the whole slew of portfolios that Sabana has, about 18 properties, the majority of properties are all about 15 to 20 years old, which is ripe for asset enhancement, which is what we should be doing on our side. And we should be doing more asset enhancement sooner rather than later. And we are in our fresh strategy of doing an enhancement of asset enhancement. But because of COVID, now everything has started to slow down. We're going to keep some cash for prudent capital management, cash conservation and all that. One project that we're doing, which is our NTP, New Tech Park, AEI, that costs about 20 million alone. So again, I've got 26 million. I need to do more because a lot of my assets are aging, and I need to continue to target on the cream de la cream of tenants who are looking for higher specification, nicer lobbies, higher amenities within my portfolio itself. This is why the merger makes sense, because we are now on a combined basis where we are deepening our balance sheet. The cost of funds have also reduced substantially.
Despite, I've always had this question. My 41.6% gearing, Richard, is not like overnight. Has been there for the last 12 months. But despite the 41.6%, banks are still lending me at much cheaper rates. I showed them over the quarters that my interest cost coming down. I still borrow on an unsecured basis, which means that I don't mortgage my assets. And have wider banks, lending banks. Gearing is one thing, but generally when I sort of try to explain to my unit holders or explain to unit holders, you always look at not just gearing as a number. You look at the cost. What is the expiry profile? What is is it secured versus unsecured? What is the debt tenure? In fact, we know that Sabana's assets are 94% mortgage or secured, and that is the reason why, as part of this proposed merger, we got a new loan, unsecured basis, 2.5% interest cost versus Sabana's current 3.2% cost, 5-year tenure versus Sabana's current remaining 1.6 years left of the loan, and unsecured versus secured. So this merger and the loan that we get actually unencumbers the whole Sabana REIT. And once you are larger, can you imagine a 4.1 billion AUM enlarged REIT with 100% unsecured assets how much actually we can do to do all the AEIs and redevelopments that we have in plan.
flexibility.
And more flexibility.
More
Yes,
And take note,
yes.
the banks that have negotiated with Adrian, it's also some of them are my banks. And they are saying, no, we only give you 3.2%. And yet, when Sabana REIT being a much bigger entity, they're able to bring it down from whatever we've done. We were at 3.8% then in June, to bring it down to 2.5%. So again, it's all about the cloud. It's all about the size in that sense.
Society. That's why we've been seeing quite a few REIT mergers.
Which is why,
Yes,
exactly.
yes,
exactly.
yes.
Okay, let's take for. So in order for the REIT merger to go through, there must be very high percentage of minority unit holders to vote. At least 88% remaining 63% unit holders to vote for this is required. How do you achieve? Let's see, this is a statement as well as a question.
Okay, I'm not sure how the maths works over here, but we need to have 50% of our unit holders present. And out of that, we also need to have at least 75% of votes in terms of share values to actually, for this merger to go through. And it is our parties in concert are not allowed to vote in that. So right now, it is the best position. The merger process is in the hands of minority independent unit holders in that sense. Yeah. So the question here is how to achieve. I think this is why, Sabana REIT and ESR-REIT, we've been going through with a lot of communications with our unit holders, coming out with weekly clarifications, with many dossiers, with presentations, with scheme documents, which is substantiating all our assertions, our financial analysis, our valuation reports, together with all our merit in terms of rationale, with the strategic rationale and the support of our IFA that stipulates that these financial terms stated is fair and reasonable. So all that is up to minority independent unit holders to evaluate. So we hope they can see the positive side in this merger versus being just a standalone REIT in a COVID-19, in the worst of times where we still don't know when the end of COVID-19 will be.
Yeah, I mean, so Donna and I, we've got a lot of SIAS dialogue sessions, we have a lot of clarifications. The key for us, and it's not helped by the fact that we have a lot of noises in the market. So we actually need to come out and clear the noises in the market so that minority shareholders could have informed decision, see what are claims, what are actually real things, and make an informed decision. Yeah.
So just to summarize, I think for usually under a scheme of arrangement, and this is quite standard, it also needs to be court approved, right? Because it's not just that, hey, I finished here, you still need to be sanctioned by the court. So is you have yet another layer of
regulatory government
hurdles
controls
to
and all that.
ensure that it's done fairly for the minority, because in this case, only minority can vote. So that's important,
And that protects the minority interest as well. When the court comes in, it's mentally to sanction to protect minority interest.
So here's another question. If I accept the merger proposal, can the new management provide the next 2 years DPU comparison before and after the merger? Are we allowed to do projections?
This is projection, this is forecasting already.
I don't think we are. I think under the rules side, we're not probably allowed to do regular projections. Maybe I take the question first, Donald, if you don't mind. But the comparison of before and after merger is there. The key is actually the comparison. And that is where the historical pro forma shows that, and it's in all my circular is in Sabana's scheme documents. So the comparison is there for that to show. And not just the comparison, we actually show where is the source of the DPU accretion. Simple, as a summary, the source is lower cost of debt, as well as that we have land rent savings because we're going to pay upfront land premium. And that means that once you pay upfront land premium, on an ongoing basis, going future, we don't need to pay land rent. So the land rent savings as well as the lower cost, this is the source of where the comparison of before and after merger of the DPU accretion comes from. And this, for example, the debt cost savings, Richard, it's not some fluff numbers where I come and tell, hey, Donald, I have some serious financial banks willing to finance me, Donald said, Adrian, show me. And I give him a committed term sheet to show that. Which are the banks? 2.5%, 5 years, unsecured.
So maybe if I reframe this question to that, okay, so what's next? What I think it's more of what's next.
Yeah.
How are you intending to grow the DPU? I think more that is Nat's question.
I think key to that is actually the fact that now there is the thing that we mentioned that we are looking into going into a regional global index, and that helps to do in re-rating onto the enhanced REIT in that sense. And that's what all the other 4 or 5 REITs that merger that has transpired, they are all aspiring to get into the global index in that sense. And you've seen that for Fraser Logistic Trust, and you've seen how performance in terms of their share price have actually gone up by virtue of the incorporation of the global. And on top of that, I think the interesting opportunity on my side is, of course, we are able now to have a bigger portfolio where we can create swing space and do active asset enhancement to our property. On a small portfolio like mine, I can't move tenants out to another property because I don't have any. And an example, a real example that we have is 3A Jukun, where we have a 200,000 square feet tenant who's keen to stay on, but he needs another expansion space of 300,000 square feet. And we didn't have any, and we lost that in that sense. And that was about 12 months ago. If we had this merger and this been voted through by unit holders, we could have easily gotten this tenant to stay on in our enhanced portfolio, and we could all benefit in terms of enlarging our occupancy. And that helps to keep tenants in, improve occupancy, which effectively increases DPU on a larger scale basis.
Yeah, so I add on to Donald, right? Your question is, so what do we expect after the merger? Well, the interest cost savings is there, unencumbrances is there, I repeated it a lot of times, the land rent savings is there, that shows the DPU accretion. And this is where Donald has said, then where's the other potential upside? Cross-marketing, leasing, we now have a larger base. We can leverage on the ESR group, ESR REIT's larger tenant base, or to actually do cross-marketing, do leasing, like Donald says. We can shift tenants around. So marketing and leasing, we can leverage on that to improve occupancy. That's one. As a standalone, it's probably harder. But with 75 properties, 4.1 billion combined, we will find it easier. We can shift people around. People want business park space. Is Sabana potential Sabana tenant want to upgrade into a business park? Yes, we have. And if we want people to go into logistics space, a warehouse, cargo lift, we can go there. Second thing, we can do AEI's redevelopment because now we are larger. We are able to manage. So if we close down one asset, your DPU impact is not that great. But because we have a bigger buffer, we are now 4.1 billion, 75 properties. So, and then the lastly is obviously overseas acquisition. ESR, sponsored ESR Cayman has about US $26 billion worth of assets in the region. And these are, and this is important, going overseas is important, because I need to share with a lot of unit holders, both my unit holders as well as Sabana REIT unit holders. Singapore, structurally, land leases are short. Singapore industrial, Singapore industrial. Singapore office, Singapore hotel, 99 years, 999 years is there. But Singapore industrial land lease are short. Structurally is there. It will affect valuation. We make no excuse about it. It will. Fundamentally it's there. So going overseas help to address this underlying so-called structural issue. And this is where, when you want to go overseas, you have to have a sponsor that has a footprint, because real estate is a local game. You cannot just go into the country and assume that you know the country well. So ESR has footprints in China, in Japan, in Australia, in India, in Korea, and also in Singapore. And this is, and when I say platform, it's not some rep office. We're talking about a full marketing, leasing, property management, asset management platform. So it's we are localized, and this is help us to actually look at the assets, manage those assets, such that it structurally address the underlying land lease issue.
So it's a combination. So
Yes.
very similar to there's another question here. what future? So I think you've more or less
Okay,
answered
maybe
what future
I
initiatives.
probably have just answered that
Yeah,
question.
so we've just addressed this, I mean, I think, and one of the, I mean, since you're on this, because a lot of unit holders are looking, with, this COVID-19 growth in, especially, in this data centers. So is that a possibility?
Of course, there's a possibility. We're industrial. I always put out myself ESR-REIT as a industrial landlord. We are so-called sector agnostic. We provide space for the best users, to provide space for the industrialists that wants to have that. And we make sure that our property is flexible enough to do that. In ESR-REIT's today's portfolio, I have data center tenants.
You see, so yeah,
Yes,
that's
I have
the
data
growth
center
that's-
tenants, exactly.
We're seeing
so,
this,
yes,
the
correct,
new,
correct. Yeah, we are
especially-
not like the Keppel DC REIT is 100%, but we have our assets are nimble and flexible enough for data center operators to actually use. And actually, this is the key. Technology, advanced technology, disruptions, COVID-19, US-China trade tensions has changed the way industrially manufacture goods, how we do things, how we live. New Singapore's economic fabric is changing. Industry 4.0 is coming. If you do not change your properties, upgrade your properties to remain relevant, you have an issue. And with size, you have access to capital, you have lower costs because you don't retain any cash. That is why we need to remain relevant. Yes.
So the portfolio is pretty diversified in that
Correct,
respect.
correct,
what I mean?
correct,
So
correct.
even you grow, there is you're going into a big diversified portfolio.
Correct.
So to be able to
So that
manage,
the portfolio risk becomes lower.
yeah, to
Yeah.
reduce it.
Yeah.
That's great. So let's take another question from Sean. Quartz and Black Crane have represented that they are able to improve Sabana's yield by internalizing the manager. Can you comment? I think this is definitely for you.
So, well, definitely for me, and this is definitely back to them because we're coming back with 30, 40 questions today. I hope they can actually respond. These are very basic questions to see how, from the answers, we know how well they know about the properties that we have, how well they know about the Singapore industrial market in that sense. But if you look at specifically internalizing the manager, a few key points, other than the main points, questions that we raised, is that there are three main key points. One is that manager, who is the person that they're talking about in terms of going to run this? Because this person has to be MAS licensed person, okay? And he must have some experience running it, and especially the experience running an industrial property in Singapore. Secondly, in terms of the banks that they have, they mentioned that we've got strong interest for some banks to take over the composite loan of Sabana REIT. Question is that, have they spoken to our banks? Any change of manager, and this is just not Sabana REIT, it applies to all REIT manager, any change of the banks any change of the REIT manager, that it causes a cross default of
Change
loans.
of control clause. It's very common.
It's similar everywhere.
Yeah.
And this creates a risk to all unit holders. So the question here is that when you talk about internalizing, please provide more information, whether they've spoken to the authorities on that, who are your banks? And also when they talk about, they've got banks who are interested and all that, we can bring down the cost of funds from 3.8 to 3.2%. But the reality is we're already at 3.2%. Are they setting the target too low? Whereas on ESR-REIT, they have already gotten a committed signed facility agreement at 2.5%. So it puzzles us, as this is basically one of their strategy to bring down the cost of fund, where naturally it's not going to happen. So the DPU component is the same thing. They say we can accelerate DPU in the next 18, 24 months for 20%. But the question here is that part of their strategy to increase DPU is to take out one property out, get the tenant out, which is 3325, which occupies about 5% of my gross rental income. If you chase a tenant out, you cannot expect DPU to go up. If I chase my tenant out from my building and my tenant's not going to pay me rental, how am I expecting my DPU to go up? So it just doesn't make sense. Again, these are they made very speculative, flimsy assumptions. We don't know what their basis are. So we would recommend, unit holders to look at the our 30, 40 questions over there,
Yeah.
and hopefully come up with some answers from Black Crane and Quartz as well.
I speak generally, Richard. We are professional fund managers. When we recommend something, we do something, we don't want to have a situation, what I like to call the you thought, I think, who confirm kind of situation. When we think of something, we analyze it, we get the basis, we believe that it can be done, we go and get the quotes, we get it. My guys, and it applies to Donald. We cannot have a situation that after we've announced everything, announced to the public that we're going to do this, we'll do that, and then everybody looks at everybody, so the questions comes up. So you can't have that, you thought, I think, who confirm. When we want to do a merger, we think that we can get a better, lower cost. We go and get.
You jolly well go and get it, right?
We jolly well go and get it.
Expectation from unit holders is
yes,
us.
and then we confirm with the debt committed term sheet. Whatever basis that we write behind in terms of a pro forma DPU, historical pro forma DPU accretion, of which my side, your side, 12.9, your side, 3.0, my side, professionals look through this. Accountants, legal guys look through this. And you have IFA coming to tell you that this is fair and reasonable, or for my side, it's not detrimental to normal commercial terms, it's not detrimental to my unit holders. And then today, you have Glass Lewis, and SIAS, who are the prominent proxy advisors whom big institutional funds listen to in order to cast their votes, actually coming out to say that both REITs, your resolutions, we advise institutional funds to vote for it. So you see, we're backed up by this and all. So generally, that's what I think as a fund manager, as a professional person who understands real estate, who understands investment, that is the basic, and that is very important, or else it becomes noises in the market and confuses a lot of people.
So we need to go with what is known and can be backed up.
And it's backed up and reviewed by the authorities. And unit holders needs to know all this rather than noises in the market and making decision based on noises, flimsy 1 or 2 pages, which is unsubstantiated. I think that's the key. Because decision-making time is now. We don't have time, unfortunately. Our EGM is on the 4th of December.
Okay, so let's go back to another question. So we're back to another question of NAV again. Based on NAV of Sabana properties, I want to know why the management accepts merger conditions that value our properties below NAV. I think it's very simple.
Okay.
Please explain the rationale behind the merger discussions.
Okay. We'll try to explain simpler, because I think this was covered earlier. The value of our property is what the value is reflected by the market. So if you look at the last 3 years when I was here, Sabana trading price has always been between 20 to 30% below NAV in that sense. At that point in time, it's 56 cents. It's come down because of COVID-19. Yeah? But if you look at the NAV component, which is important consideration, we're looking at a slight dilution of 20%, but you should also relook into the other set of metrics, which is DPU, which is the highest in all recent mergers in that sense at 12.9%. There has been instances also in the past. I believe there is another REIT, Fraser Logistics, which had a NAV dilution of about 14%, and it went through. The purpose of this is really to look into the merits of the merger, where we are looking into size, we are looking into portfolio diversification. We're trying to reduce our risk so that we can do things together and to enhance our growth through AI redevelopment, which has least impact on our portfolio, as opposed to Sabana. When we start doing a redevelopment, it will take 5-10% out of my DPU. And as a result, in today's market, you are not able to spend money because of COVID-19. You have to have cash conservation process in that sense. I'm not sure how to answer the question, but it's a different format.
I guess it comes back to the point that what is a historical trading price? The trading price of a REIT reflects the underlying assets and the market's view of what they believe the worth of the assets are. It just comes back to that simple, and that I explained just now is the starting point for all of us to discuss, to start to negotiate. Yeah.
So it's because it's traded and the price is there, transparency is there.
Correct. Yes.
Okay, so therefore, what happens if the deal is not approved by unit holders?
So I'll take that first. I hope it goes through because we're putting a lot of effort. We're getting professionals. We've got the IFA opinion. We have got scheme documents and all that out. If it doesn't go through, we will continue to be a small REIT. So we will still be hampered by a lot of things that we want to do now, but we can't because it has an impact in terms of our DPU. It will have an impact, whatever I do, post doing AEI, it will have impact on my occupancy at the end of the day. And if you look in today's market, where the government is now getting landlords and REITs to be able to play a role in in tenants, the realigned framework is coming. I'm not looking forward to that.
We are not looking forward to
that. That means basically tenants can press the button and negotiate with landlord. And these are small micro tenants. And we've got the largest number of, I've got the largest number of SMEs, which is about up to 50%. I think, Adrian, you've got 30 plus. So it's not, it is not a blessing to have many, but we want to help our tenants in that sense. So under this aligned framework, tenants can press the button, they can renegotiate. And if they cannot renegotiate, then they say, okay, I can leave the property. So we are into a very difficult period right now. We want to help tenants. We also know the call of the government. But again, this applies to all big landlords and all REITs. No matter whether you are 0.9 billion REIT or you are a 22 billion REIT, the impact is the same. But what is felt on a smaller REIT is multiplied in terms of the effect. So that's the difference over here.
So it's very similar. I can rephrase that question.
Yes.
What is the risk if you don't do this deal? And
Correct.
which is basically the similar.
Correct.
You highlighted those risks.
So the risk is,
well.
I have to answer, when is the economy likely to start to grow again? When will COVID-19 go away? When will vaccine be found? So then we can actually look into potentially, possibly by then, we should be able to harness our position and to see valuation moving upwards, increase our debt headroom, and then potentially we might be able to do more AIs. But again, I'm doing AI based on my track record. Supposed to complete in 10 months for New Tech Park. We only it's now because of the restart and circuit breaker, now it's going to be 1.5 years. I like to do 2-3 AIs in 1 year rather than 1 AI in 2 years, unfortunately.
For me, if the merger doesn't go through, we have a 3-year business plan. I'm probably in a luckier position because I'm a bit more sizable, 3 billion assets AUM. But nevertheless, the holy grail of being included in indices will take a little bit longer time. But we will get there because I have my sponsors' pipeline of $26 billion, which you had good there. I have my assets are unencumbered, and my sponsor ESR Cayman has been very supportive of fundraisings. The last 2 times that since I joined on board, we had about 2 fundraisings, equity fundraisings, and ESR backstop it. It shows that the conviction that they have in our business, and this equity fundraising that they backstop, the use of proceeds was actually for third-party assets. We're not talking about our own, but we will still continue with AEIs, but yes, unfortunately, the potential inclusion in the index will take probably a little bit longer, but I think we'll get there. And why is index inclusion important? Yes, because it gives you a wider pool of access to capital as well as lower cost of that. And if you look at a lot of the other REITs to our index stock, there is a positive correlation between size, inclusion in index, and share price re-rating, and how it trades at a premium or a discount to NAV. One classic example is Fraser's Logistics Trust. It was included in the EPRA NAREIT, and the index I'm referring to is the EPRA NAREIT Global Developers Index, because that's a holy grail of index. A lot of index funds and real estate funds actually follows. So there's a correlation there, and you ask all the learned analysts, they will tell you it is there.
Yeah, because I think some institutional investors, some fund managers cannot. Just can't. If you're not in the index, I can't actually buy into you. That is that challenge.
You need high liquidity.
Yeah.
Our liquidity is only 0.5, 0.6 million shares. When these index funds investors buy, they buy 3, 4 million. That's not enough to buy in a day, unfortunately. Which is why important to actually get into
so it creates more liquidity.
Correct, exactly.
Correct.
And re-rating as well.
So another question, why not sell our assets to ESR at NAV, and then we can decide whether to invest in ESR for continuous DPU instead of merger with a steep discount to NAV? Is it definitely not equitable? I think it's
So this is the concept on sale versus merger, they talk about assets and sale and all that. So
And also on the price as well.
yeah, it's price as well. So if you look at the price, okay, if you look at what we've been trying to do to sell, give an example, 1 Tuas Avenue 4, we've been trying to sell that in the last 2 years already. Repeatedly, we got offers which is much lesser than valuation. In fact, on the 27th of July this year, we read newspaper and we found out that our neighbor was just sold at 32% below the guide price. Our neighbor in 1 Tuas. What we're trying to say here is that it is not, firstly, easy to find a buyer in a market at NAV price, at market price for certain properties in that sense. And the fact that we've been trying to sell our 1 Tuas for the longest time, we are not able to get buyers. In fact, we found a buyer at below valuation, but at the same time, the buyer was not approved by JTC. Like I say, Jurong Town Corporation is a regulated, where buyers need to be...
Actually, Singapore industrial, that's why I was mentioning, Singapore industrial is quite unique versus the office sector and the hotel sector. Not just that the land lease is short, but there are a lot more regulations regards to who are allowed to buy JTC assets that sits on JTC land, and even tenants who are allowed to go into rent a space in JTC assets that sits on JTC land. So this is the intricacies of industrial sector in Singapore, and that is the reason why it takes a lot of understanding. It takes a lot of somebody like a veteran like Donald,
so,
who does this to understand.
So you look at the market, it's for someone looking outside of Singapore. They will say, should be able to sell what? Properties all homogeneous. I see a lot of transaction, foreign buyers buying residential, hotels and office. Why can't you sell industrial? Take note, this is actually the right to use land. You're not buying freehold title. It's the right to use, and every 30 years you got to go back to JTC, pay, top up land rental, which a lot of foreign investors don't understand. But Singapore, where the market, where you find it is dealing on 30-year lease, you find that the number of transactions is lesser. Unlike if you have a freehold property, there's a lot of buyers in the market. So you can mark to market. Where there are not many buyers in the market, it's harder to mark to market as well. The only buyers are REITs like us that can buy, and REITs are now looking to buying overseas.
And end users.
Or end users. End users have got choices. They can go to government, JTC on prepared land, clean, they get 22 years and they buy and they build their own property. So there are a lot of options in the market. So there is really no investment market where you can go out there and get the best price above valuation or even at valuation in today's market. Because now again, like I say, not only before COVID you can't do it, now that the COVID-19 is here, it's even harder.
I guess the pool, where we're trying to come from is that because of the restrictions of Singapore industrial assets that sits on JTC land, the pool of potential buyers is not like the hotel or office sector where anybody who has money just can come in and buy. Singapore industrial land in Singapore. The purpose is to use for economic activity, not for speculation, and that is why government imposes who can buy, who can rent the space, and all. So that is where I think we're coming from. It's the pool of, and when the pool is smaller, you may not necessarily get the so-called the best price tension to maximize the valuation. That's especially where you're coming from. Yeah.
I think there's a lot more. I think we need to carry on more education on this.
yes.
This is an education.
This is fine. Yes.
We're happy to share.
I think
We're
that's the challenge. A lot of people. Hey, I thought I'd buy this REIT the same as buying the other REIT. What's so different?
Yes.
Correct.
I mean, but I think people are being.
We're happy to always share. Right?
There are differences
differences.
even within the sectors. And
Correct.
All that.
Correct.
Yeah.
Exactly.
So what evidence that the board has negotiated for the best possible terms at its exchange ratio? Sounds like activists have more faith in Sabana's true value than the board. Perhaps I think, Donald, could you just,
Sure.
I think you have also raised certain other questions.
Yeah, so if you look at the ways, the evidence that the board has negotiated with us, I think this was not negotiated in a matter of days or weeks. This took months to be able to derive. We deliberated various options, negotiated many months. And at the end of the day, we are also doing it in the presence of our own respective financial advisors. We're not doing it alone because our financial advisors is creating all the various models in terms of financing and all the things.
And
so if you
IP,
look at that,
right?
at the end of the day, this is the best terms. We're not looking at the best term for me or the best term for Adrian, because we need to go to our own respective unit holders to vote. And it has to be an optimum level where we feel that, yeah, at this level, I think we can get through.
Both unit holders
That's
must
fair.
approve the deal. If I skew the deal to one side and O'Donnell skews his deal to
If
one
I've got
side,
no confidence, I would
one
not
of time
have
we
my
not be
scheme,
we not be able to have it. And
my EGM.
and
yeah.
this transaction is also whatever the terms that we have, the balanced terms that we've balanced, the terms which are proposed terms which can balance both sides is identified. It's verified by our respective IFAs. Yeah.
So let's look at, will the merger lead to reduced costs and overheads? In other words, only one set of trustee costs, only one set of manager costs, etc. Maybe, sorry, back to Adrian, I think.
Yes, answer is yes.
It's a post-merger,
Yeah,
and I think
so-
you've highlighted some
Yes,
of the
it is. So I think the reduced cost-wise it's actually on operational as well, right? Because you get economies of scale. Being a little bigger, we can actually have more clout with our service providers. I know they don't like to hear this. I hope none of the unit holders here are also working for service providers. But that's the truth of the matter. We also have better bargaining power with tenants. Sometimes we had experienced that before, prior to us being 3 billion, when we were 1.5 billion under the old Cambridge Industrial Trust days. We tend to be price takers from tenants rather than price setters. We are still not price setters.
I remember the Cambridge Industrial Days.
yes. But so the synergies from cross-marketing, the operating costs could be better. I mean, if you look at the map that we put out in these 75 properties, we are actually clustered quite close together. So we can have one set of property managers managing a few assets. So synergies, economies of scales, better bargaining power with service providers, with tenants actually comes then. Yes, there will be only one trustee. And the manager is only one manager, so it's just one fee.
I think a lot of times people forget the role of the sponsor.
Yes.
I think a lot of people underestimate the role of sponsors.
Yes.
You know what I mean? And I think this is something to highlight.
I think the sponsor is very important. The sponsor also depends on who's the sponsor. If you have a developer sponsor, if your sponsor is a financial sponsor, as compared to a developer sponsor, that's different. Because the REIT's point is to be able to grow, to have assets, to do redevelopments. When you have a developer sponsor, you have the full suite of platform. Developer sponsor is able to create that pipeline that's visible for you. A financial sponsor does not develop. They are just, investments. They're just investing in a fund, investing in you. So a developer sponsor helps you to grow operationally and financially. And if you have a strong developer sponsor who is able to finance you, it's even better. And I think ESR Cayman has shown that they are financially strong. They backstop and support our fundraising. And given that they are also developer sponsor, they're in real estate, when they give you a backstop for the fundraising, they must have validated that investment must be sensible. If not, they won't be throwing good money after bad money, right?
So if you look at the banks would see the manager differently if it's supported by a strong sponsor, which is why Adrian on a large basis can actually renegotiate our total debt from 3.8 to 3 to 2.5%. As opposed to the internalized proposal by Black Crane and Quartz, they're talking about a non-sponsor, which is firstly dangerous, and banks see it very differently, which is why they also said that they can only get it up to 3.2% versus 2.5% with sponsors. So banks see it very differently. It's actually quite evident that they're not able to get very good terms, unfortunately.
Okay, let's look at the next one. Does this merger give Sabana management an easy exit from working to create value internally? I think you'll still be. We will talk about that.
Okay.
Are they biased in seeing the benefits of the merger instead of negotiating for better for its unit holders? Could you just share, give some insight to Zara?
Sure.
Zafar.
Okay, this part, does this merger give Sabana management an easy exit from working to create? Let me put things in perspective. We're working hard for this merger because this is the only formal offer that we got. In the last 3 years, even if I backtrack to 21/7, when there was another strategic review where we went around to find potential buyers and there were none. So in the last 4 years, there was no offer. This is the only one we have. And we are working hard to get this merger through we've got all the documents and we've got the EJ coming. Now, why are we doing it? Think about it. Is it to benefit the manager? Is it to benefit myself? If this merger goes through, Richard, I will not be a CEO. My board will not be a board directors of Sabana REIT. What is there for us? Think about it. I mean, unit holders, think about it. Is there any benefit over here? Or are we actually doing it for unit holders? Think about it.
I think I always come back to the point that, Richard, the world has changed. I repeat the same thing again, but I think this is a reality of life that we have. Technological advances, disruptions, COVID-19 seriously has made us look at the way we do things differently. If this was pre-COVID, we will not be sitting in this room. SIAS did the first merger when Sabana and Viva. We were in a meeting room.
Yeah.
Right?
See everyone.
We seeing
You could
everyone,
see all
seeing
of
unit
you.
holders. Yeah. So people need to realize that things are not the same. Will it come back to the same? We hope so. When? It's a $1 million question. But most important for us is that we need to do what is right for our unit holders. I am also doing this thing for the unit holders. As I said, Richard, somebody asked me, Adrian, why don't my unit holders on Monday asked me, Adrian, why don't you just forget about this? It looks like it's so scary, Singapore is so scary, and you're still buying Singapore. Why don't you just go and buy overseas assets? But I'm doing this is because for my own unit holders, I also need to put on the hat for them to say that, look, if you have Singapore assets, we understand Singapore assets. When we are 4.1 billion, when you start to go overseas, the risk at the buffer is bigger because there is different kind of risk. So I think we're all doing this for the benefit of our respective unit holders. And this is something that is I think unit holders of both sides should understand that.
Yeah. And I think from yours, I mean, we've struggled from the size issue for a very long
time. It's small is not sexy.
Yeah.
And the fact that this merger proposal is intending to have invest our unit holders to continue to stay invested inside to a larger vehicle. You're not selling off anything. And the last 4 or 5 mergers that have gone through have all proven reasonable success, being a bigger entity in that sense.
The size does matter.
Absolutely.
So I think you just mentioned about
just
this.
mentioned,
You just mentioned about this.
This is something that we can vote for resolution. It's a yes or no answer. We did not know.
Okay, this was the last question, ladies and gentlemen. I hope I've managed to address all your questions before last closing comments. I'll let you pass it over to Donald and then Adrian to actually just close up in terms of their closing comments. Donald, please.
So as I mentioned, I think unit holders, this is really an important time to be able to put your voice to vote in that sense. And we only have a few more days left. We are looking at basically a firm, formal proposal, the only one that we have. And if you look into the basis of it, our board have evaluated thoroughly with financial advisors. We have a scheme document that is already out. Please review that thoroughly. Please look at some of our comments and some of our reaching out, being transparent with unit holders. All questions have already been answered. Look now into the merit of the deal itself. It's DPU accretive. It is basically making the REIT bigger, more diversified, and we are looking at basically reducing our costs. And to be ranked 4th largest in industrial space in GFA basis, to be able to get all the agents to work for us, so that one stop, we can bring all the tenants as much as possible to keep it within the portfolio. As a small REIT, we can't do that. There's a lot of things that I want to do, But being small and with COVID-19 is quite difficult in this. So I hope that unit holders can look into the totality of the merit, neglect the noises, and vote accordingly. We hope you can vote yes in that sense.
Yeah, I think from ESR-REIT's point of view, we believe that the terms are fair. I always point out, I believe that trading prices of any REITs is a true reflection of the market's view of your true NAV of your asset. NAV is one factor, but most important thing, you need to look at DPU accretion as well, and many other factors that you have, especially looking forward. I'm a firm believer that size does matters. Empirical evidence, research analysts that you talk to will tell you that there is a positive correlation between size, index stocks, and whether the stock trades at a premium or the discount to NAV. That's one. Size gives you access to wider pools of capital, lower cost of debt. We are a REIT. We don't retain cash. We need to pay out at least 90%. Access to capital, continuous access to capital is very important. And if you can get it at a cheaper price, then you can execute all your growth plans, whether it's AEI, asset enhancements, redevelopments, or acquisition growth. So you end up, and as you execute this, you increase your DPU and NAV. And as you increase your DPU and NAV, it becomes bigger. And as it becomes bigger, your weightage in the index becomes bigger. And as your weightage in the index becomes bigger, more funds has to buy you, and your cost comes down again. You become a virtuous cycle. But if you don't have that size, then funds don't need to buy you, because there are a lot of other REITs, alternatives for fund managers. They don't need to buy you. And as Richard, you pointed out, that funds wants to look at liquidity. And some funds cannot buy you because you are not in the index stock. So to us, size does matters. REIT games matters, whether from a cost of equity or cost of debt perspective is there. So even though this is a SIAS session for Sabana REIT unit holders, I know some Sabana REIT holders are also shareholders of ESR-REIT holders. I hope they're on screen as well. I implore you to actually vote for this merger, because size really, really matters.
Thank you, Donald. Thank you, Adrian.
Thank you.
Ladies and gentlemen, thank you for joining us. The vote is in your hands. Whatever the decision, this is the only offer on the table. So let's focus on what is at hand at this present moment. With that, just remember to send your proxy forms. I think maybe just close in terms of timing, just to recap in terms of timing, Donald.
So proxy forms has to be sent and to be reached to the registrar on the 1st of December before 2 p.m., which is for the scheme and
for the trust deed changes.
Trust deed changes. For the trust deed, and for the scheme. EGM, it will be at 2:30 p.m. So that's the important date. So you got to send now in that sense.
Thank you very much, ladies
and gentlemen.
And have a good evening.
Thank you.
Thank you.
Bye.
Thank you.